Hi, welcome back to another edition of Lipper's Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, May 10th, 2017. A lot of investors breathed a sigh of relief when they learned that the French presidential elections were completed and that centrist Emmanuel Macron was actually brought in as the president. Now, this was actually taken down a notch a little bit after we heard that President Trump fired the FBI director, Comey, and also that some news was coming up that OPEC was going to meet again, talking about putting a cap on production, and people are a little bit concerned about that, and also people are a little bit concerned about the extended market that's been going on, a little frothy around the lips there. But when we take a look at the actual returns, the NASDAQ actually posted its 31st record high during the week, and for this for 2017, so 31st, that's a big number as far as those returns go, and it returned about 2.49% for the week on its own. Now that said, we saw the Dow lose about 0.07%. Well, let's see how this all panned out into the flows arena to see how that impacted flows at the macro level. If we take a look at equity funds actually saw outflows, big outflows, $3.8 billion. Taxable bond funds took in about $2.6 billion. We saw muni bond funds taking about $600 million, and money market funds took in about $1.2 billion. Well, let's take a kind of step-by-step look at each of the macro groups on their own to see how that panned out and what actually occurred. Let's take a look at the equity funds now. And if we take a look at that group, we saw that they had a return of a 0.79%. But as I said, and by the way, second week in three that they've had plus side performance, but it's the seventh consecutive week we've seen outflows, this time to the tune of $3.8 billion. Breaking this down into domestic and non-domestic, in the past, non-domestics has been doing a little bit better than domestic, but I think people were really concerned about the upcoming French presidential elections. It wasn't done until this past Sunday, and we saw that domestic equity funds saw about $1.8 billion of outflows. 19th consecutive week they've seen outflows, return of about 0.62%, while non-domestic equity funds saw about $2 billion worth of outflows. This is the third week in four that they've actually witnessed outflows, and they had a quite nice return, about 1.13% for the week. If we break this down even further, we could see that the large cap funds once again was the pariah, losing about $1 billion, and international equity funds, not necessarily emerging markets, but really the developed market funds really kind of took it on the chin, $1.6 billion. Well, let's take a look now at the ETF arena to see how that panned out. A little bit different story. It's a tale of two cities that we've been talking about. Authorized participants for the fifth consecutive week injected about $1.6 billion into the ETF universe. This is, again, their fifth consecutive week they've seen inflows. And at the top of the arena, we saw pretty much it dominated by European type of funds. So iShares MSCI, EFA took in about $1.1 billion. We saw the iShares MSCI Eurozone taking about $900 million. And at the very bottom, here's a little bit of that concern locally. What's going to go on? Can Trump build a coalition between the government now that he fired Comey and all things are kind of getting messed up? We saw the Spider S&P 500 lose about $2.5 billion. And we saw the iShares Russell 2000 lose about $1.2 billion. So again, a tale of two cities. Retail investors, mom and pop investors, still staying conservative. The authorized participants, smart money, whatever you want to call it, they actually put money in, back to work into equity funds. Let's take a look at what happened on the fixed income side. Now, for the fourth consecutive week, we've seen inflows, this time to the tune of $2.6 billion. It's the first week, we saw outflows of we saw inflows about $2.6 billion. First week in 9, though, that we've actually seen negative performance, 0.03% loss, so almost nothing. If we look at the big leaderboard, though, we see that corporate investment grade debt funds actually took in the lion's share of the money, about $1.9 billion. 23rd consecutive week they've seen money come into their coffers. And as we have told you, kind of the grouping of the corporate investment grade debt funds is basically including loan participation funds. Loan participation funds took in money for the 26th consecutive week, and basically to the tune of $219 million this week. And at the bottom of the barrel, we saw government mortgage funds losing money, and they basically lost about $155 million. It was the only group to actually suffer outflows, and it's kind of amazing with the market that we've seen. New records, both the S&P and also the NASDAQ during the week. We saw many records in the beginning of the week, and still investors are preferring to put their money to work in fixed income securities. Let's take a look now at the ETF side of the business. This is a little bit of a tale of two cities. We saw outflows this week for ETFs. First week in 8 that we've seen outflows out of ETF fixed income funds. This time to the tune of just about $400 million in outflows. At the top of the group, as far as inflows go, we saw the PIMCO short maturity enhanced active bond fund taking about $220 million, and then we saw the iShares U.S. preferred stock take in about $174 million. At the bottom of the barrel, we saw iShares iBox high yield corporate grade investment corporate debt ETF fund lose about $1.4 billion. So not a really big story there, not a lot of flows either way, but certainly kind of the bet was at the short end and for preferred stock, and they got rid of some of the higher yield. They were running away from risk as well. Let's take a look at our muni bond fund group. Basically, we saw inflows for the fifth consecutive week. It's the second week in 3 that they've had negative returns, but only to the tune of minus 0.03. And they took in about $575 million. The lion's share actually went to national munis, who took in about $606 million. And that means there was some outflows out of single state. We've been kind of seeing that. And this is the 5th consecutive week that we've actually seen inflows into the national munis group. And we really think a lot of this has to do with, again, maybe we'll call it the Comey thing that just turned around, but people are concerned that the tax bill that was promised by President, I was going to say Obama, isn't that amazing, by President Trump, basically he's not going to be able to build a coalition to actually get the deep tax cuts that he wanted. So that's what the concern is. So we have kind of maybe a lower tax cut than has been expected, so people are now looking at tax advantage products again. Well, let's take a look now at our money market funds and see what happened in that group. We saw for the second week in 3 inflows, this time to the tune of about $1.2 billion. Taxable money market funds took in about $743 million, while tax-exempt money market funds saw about $438 million. Kind of makes sense right at the end of tax period. You know, tax time was April 20th. We're going to the second week of May, and so people are, now kind of putting money back to work. And again, we had a little flight to safety before we had the French elections done, and obviously some other issues going on. If we break this out, though, we see that on taxable money market side that there was about $743 million that was put into institutional funds as far as institutional money, and all the rest basically came from the retail side as well. So that's about 1.5. So we had $2.2 billion institutional, 1.5 in the retail as far as outflows go, bringing us to $743 million of inflows. Well, that's it for me this week. And basically, we saw some fairly good news come out. We heard that the April retail sales actually rose about 0.4%, which is a big thing. But again, I think people are going to be very concerned at the what's going on, the Comey fallout, some people are calling it, to see what's going to happen with Trump's ability and the Trump administration's ability to kind of get a coalition together to make those tax cuts deep, to come up with infrastructure spending and kind of all the things that he's promised. So that's what people are going to keep an eye on. Well, if I haven't covered the areas that you'd like to have covered, please go to our website, www.lipperusfundflows.com. If not, you can join us next week where one of our analysts will talk about the flows and the patterns for that week. Thanks for joining me. My name's Tom Roseen, wishing you the best in your wealth planning and creation.